Good evening. This is Ken from Tortoise Capital Management for trades of the day on January 8th, 2013. I want to just start off looking at what the previous day had looked like in the market health check. The slope was, so this is a daily chart. Slope was up. It was up above the floodplain. In other words, above two Bollinger Bands, above the 30. That's the light blue. The price ribbon is the 2-period Bollinger Band. You see it has been holding right at resistance here at about 146.5, which was the previous triple high. So it's testing that. The regression line slope is up. It's in the upper half of the regression channel. Price is trending up. Regression line's trending up. The 10-period, the 30, and the 50 are all trending up. The slope of the 30 is improving, of the 30-period regression line, and we've been pulling away from the 200 moving average. However, the last 3 days have been small range dojis at the top of a range expansion move, a dramatic move off the bottom at 140 to 146, and then for 3 days it's had narrow range and is actually starting to roll over, it looks like, and starting to fail. So that's the case where we wouldn't be surprised to see a breakout after 3 days of preserving gains and failure to fail. But we also wouldn't be surprised by more failure to fail below yesterday's low and then a rush back to the 30-period mean. So we could have a violent move in either direction. And because the last 3 days have been narrow ranges, that also wouldn't surprise us. So this is really a tactical trading day. You got to be prepared to go in either direction. It could be the start of a sharp move. The move could be 5% over the next couple, 2-3 days in either direction, or it could be a pure sideways. So this is a tactical trading day with no directional bias. So the day starts off at the blue line. These are on 3-minute charts, and what we're looking at here is UVXY, and it had closed weekly. In other words, the market closed well the previous day on Monday, and UVXY, the double VIX, sells off, finds support around 1490, 1485. You see the the 10-period regression line rolls over. The price rolls over, passes through the VWAP. We get a regression line crossover here at 1507-ish, and we buy the price entering into the river at 1510. We put a stop just below the low of the day, a 30-cent stop, and we're looking at it pretty quickly moves almost to the far side of the river. That's a 20-cent move. That's 2/3 of an R. You wouldn't be wrong at this point to do what we did, which is move to no lose plus dinner for 2, and lock in some games after about maybe 3 or 4 minutes of open risk. And then all we got to do now is see what the trade is going to bring. So what it actually does is here's the entry again at 1510 with a 30-cent stop. It moves up, pulls back to the Bollinger Band mean, and takes off again as it's leaving the station and pulling away. That would be a normal time to start following this up, and maybe following the 30-period regression line. If you do, you get an exit around 1535, and that's pretty good for 30 minutes at work. In this case, I had students in the class in my office, and so I had just had this stop in here. I was going to just let it go. So this move didn't shake me out. Moved back up when my office call was over. I saw this as a lower high, crosses back over the regression line. The 10 is back in the river, so I decided to go and exit at 1545, and that pulls 35 cents a share, so about 1.1 or 1.2 R in UVXY. About 20 minutes later, I think, we've got a trade in the other direction with a regression line crossover again with symbol TNA. That's the triple leveraged Russell 2000 small caps. And so we had been playing the long side in UVXY, which was going up while this TNA would be going down because they're often inversely correlated. Not always, but most of the time. And so we had a series of regression line crossovers outside the river here. We get the actual regression line crossover here. Shortly thereafterwards, the ribbon crosses into the river. You can see the slope of the 30-period regression line starts to improve. So we make our entry here on that second bar going into the river, get an entry at 69. The 30-cent stop is below the swing low of the ribbon here. And then in the next about 15 minutes, it moves out, holds briefly at the Bollinger Band mean, then moves to cross the river. And now it's back to the VWAP. During that time, the 30-period regression line has improved and is now getting ready to cross the Bollinger Band mean. What we would be looking for on this one is if and when, at such time as we get 2R in hand, with a little bit of momentum, we'd be looking at adding the second position here, especially if we can get through the VWAP and keep going. What that suggests is that all this downside move, which was bringing the VWAP down, is over. We may expect a similar move above the VWAP, basically at least this distance, so maybe another 60 cents above this, which would take it up to 70, well within a normal range stat move of the day. So we'd be looking at buying a second position if we get some momentum here. And then when the 30-period regression line leaves the river, then we'd have price, the 10-period regression, and the 30-period regression line out of the river on the same side, moving up. That would be the definition of beginning of trending behavior. So I like this posture right here. With price at 69.30, we're holding 1R, and we'd like maybe to get some more out of this. But what actually happens is it gets to the VWAP and then spends 1, 2, 3, 4 3-minute periods. So for 12 minutes, when given an opportunity to pause and resume, it doesn't. It starts rolling over. So we go ahead and take the exit at 69.30 in this region. We have to be out of it by this time anyway, which would be about 69.27 when the regression line crossover occurs. So we save 5 cents on, or 3 cents on the by getting out here when a failure at the VWAP, and with an R in hand, that gives us an 30 cents on a risk of 30 cents. So 1R. Now the blue circles indicate information that comes from certain checkpoints or critical zones or critical locations. This is, the blue circle at the regression line crossover. Another one at when the regression line crossover closes. We'll look for what is price doing here at the Bollinger Band mean. Well, it failed. The next place we'd be looking for is what's going to happen when it gets to the bottom of the river. Is it going to find support at 68.88? If so, I'd be willing to resume the trend on the long side, because if it put in a low here at 68.88, that would be a higher low than what it did last time, and then that would be seen as the first leg, and then we'd expect another leg that looked just like that. So we document the price behavior at certain checkpoints and then anticipate where the next one should occur, where we would expect to see some kind of directional indication. There were a couple other trades we did during the day, but I wanted to show just sort of typical buying at the inflection points or buying at crossover points, managing the trades, preparing for more, but taking what the market will give, not trying to make it do more than it can do. And so at the close of the day, we'll go back to the market health check. What we had was pretty much the trend line stayed in effect. Everything moves forward one day. We actually had another low range, small range day. Looked like a doji, a little bit more selling weakness. So now we've got 5 days in a row where it's failed to push higher. That could be a consequence of the beginning of earnings season, and so nobody wanted to play their hand too early. But what we had was just a continuation of the previous day, just kind of mucking around. Regression line slope is still positive. We're back inside the floodplain, though, so we're at less than 2 standard deviations above the mean, and the river continues to flow. So tomorrow the setup and market context we think is basically the same, unchanged. Failure below the low would be a reason to expect it to get back to the Bollinger Band mean. If it finds support here and takes out this swing high at 146 and maybe a quarter, we look at that as the first leg in continuation pattern. So if we get some good earnings announcements, there may be more on the long side. So again, we're going to be bidirectional, flexible during the day, looking for our indicators in the market action first, and then maybe some large caps that are doing their earnings reports. So that's a day in the life of a trader with a couple R there for January 8th, 2013. Good trading. Keep your powder dry and your risk measured.